Yo, what is going on, gamers and gamblers? Gamers and gamblers, let's gather around today around the campfire and I'll show you guys how to game and gamble like a pro. Alright, this is episode 1 of the series. I will show you guys how to gamble. Follow along, and you could be pro gamblers too. I know a lot of you guys are really impatient. You got just like me, I got the brain and attention span of a fish. So I will be going over my strategy mentally. How does it work mentally? What can you expect? What am I thinking while I'm trading? Why does it work? Mental stuff over here, the boring stuff, all the whatever. Then the cool stuff. How do I draw on the chart? How does it physically look? What showing you guys my trade, showing you guys confluences, strategies that you could use, and showing you the charts. So it's all mental and physical, and I will be combining them in today's video. So skip to the part that you want to if you want to skip. If you want to watch the whole thing, which I highly suggest because it'll make way more sense, then lock into it and be ready for a long video. Anyway, this is the first of many, so leave a comment if y'all got questions. I'm gonna try to put you on. I would like to say I'm a certified gambler. All right, look at that. We got it in. We got a glass gambling certificate. Yeah, the hardest part is just locking in and learning. That's like quite literally it. Like, uh, the actual trading is kind of easy, and also it takes time though. It's a lot of time. You got to take a lot of time to learn, and as I'm finding out, it takes a lot of time to build capital and to build a lot of money. Because it's like a snowball. You start small and you make small gains, and then you get bigger and bigger and bigger and bigger, and boom, it gets to a point where you're just making so much money, right? Look at TJR. But it's a snowball. You start real small. You start with like a flake, a snowflake, and then you become a snowman. And right now, I'd say I got my first ball. I got the base down. Now I just got to make the body in the head. I already got the base. The biggest, hardest part is done. Now it just takes time to actually build my money up and to actually build accounts. But I got the hardest part out of the way. Now let's get into it, gamers. We are going to have a journey. I'll take you guys along with me every single day that I trade, regardless if I win or lose. I will post. I will post the outcome. You heard that right. Regardless if I win or lose, I will post the outcome. I will yeah, I will be doing trade recaps, and every day until I get a payout. I don't own the money on it. It's a $50,000 account. I think there's truly only 2,000 on there with some leverage, but I have a $50,000 account, and when I get my first payout from that, that will be the end of the first journey on this YouTube channel, and there will be many more journeys after that. But for the first journey, we will be trying to secure my first payout ever. I am very close. I've already secured 1/3 of the profits I need. Basically, okay, to make this as simple as possible, I use Asia and London session to figure out where I want price to go, either up or down. And then I catch the move on the way there. That is literally the easiest I could explain it. 8 p.m. every day in Eastern Standard Time, Asia session. So somewhere in Asia, a lot of people are trading in Asia from 8 p.m. our time to midnight our time. So 4 hours. Within these 4 hours, there are a lot of people placing and selling orders. Now, what happens overnight is when these orders are placed and stuff, people leave them running overnight. So people, for example, will see this right here and be like, okay, when price, let's make this very easy. People see this and they say, ah, beautiful, a low. When price comes back down to this price, I will buy it. Okay? That is called resting orders. They're orders that are waiting to be filled. People have their orders at this price. Now, London is the same scenario, but it's later. It's past midnight. It happens at 2 in the morning at Eastern Standard Time, and it ends roughly at 5 in the morning. London session truly does not close until, I'd like to say, 11 our time in the morning. They have a very long session. However, most of the volume, most of the people trading it are only trading from 2 to 5, so those 3 hours window. So they additionally also will see the price go up and down. They're like, okay, we're going to draw a line here. And when price comes back down here, I would like to buy it. So boom, they see price, comes down here, goes up, comes back down, and then they'll buy it. Why am I telling you this? Because we call that in the market liquidity. Liquidity is resting orders. So my entire strategy is finding resting orders that my entire strategy is finding resting orders in the market. And Asia and London session have a lot of resting orders overnight. A lot of people place orders and then let them run overnight. I don't know what to tell you. They do genuinely. There are people who will place a trade, close the chart, walk away. And that is a good thing for us. That gives us liquidity, resting orders. That is what moves the market. When someone buys the stock, how do you buy it? Someone has to sell it to you. And every time someone sells it, there's a buyer. So that's how the market moves. And when people are buying it at a lower price, and they're aggressively buying it, the price will naturally go up. People don't want to buy a pair of shoes that's $200 when there's a discount for $150. Same in the stock market. If the price is at $25,000, but you know that it will go down to $24,000 eventually, would you not wait until it goes down $1,000 cheaper to buy it? It makes sense. It's called a discount price. It's literally called the discount price. So, why am I going on about discounts and all of this stuff and liquidity? My entire strategy is finding areas where there's rest in liquidity. Rest in liquidity, that is literally it. And the highest areas of liquidity are Asia session and London session. And then what we do is a lot of people tell you, oh, the stock market goes up, it goes down, it goes higher, it goes lower, and it goes higher. That is the farthest thing from the truth. Honestly, it probably looks more like this. It goes up, down, up, down, up. It'll go lower, and it'll go lower, and then it'll shoot up like that. All right. That is literally more probable than seeing that perfect up, down, up, down. So, why does price do things like this? It goes lower and then it goes higher. Why does it go lower before it goes higher? Remember what I told you about discounts and liquidity? They work together. People want to buy at a discount, and the only way to buy it at a discount is by sweeping liquidity, getting people taken out of their orders. All right, so that is the fundamental behind how my strategy works. That's the mental stuff. That's the fundamentals mental of how and why it works. Now, let's get into the cool part, the nitty gritty. Let's get into like the fun stuff that you guys all have been waiting for. And I will show you the exact trade. Surprise, surprise, guys. I was actually showing you guys the wrong chart. This was Friday's chart. All right, so I will show you guys how I picked my trade today. Yesterday. So, if you guys remember what I taught you about liquidity and all of that jazz, we already understand how the market moves. It will manipulate you before it will do the real move. It will oftentimes, 9 times out of 10, take liquidity. And that looks like a fake out. That looks like price going up before it goes down or down before it goes up. That's just how it is. So let's take a look at what we have. I will leave a link to all of my I will leave a link to all of my indicators on my YouTube video in the description below so that you guys are able to use them. So first of all, you have to frame your narrative. What do you want to see happen for the day? So Monday open. Last week we put the high of all time. The all-time high was right here. This was the highest it's ever been. So we will draw a line out and about, and we go above it on Monday, slightly above it, right? So we took buy-side liquidity. What do I want to see happen? I either want to see price continue aggressively up, aggressively up, and if you don't get that aggression, it could be a sign of a manipulation lower, right? So let's look at what the market gives us. So right now we're at all-time highs, right? And this was like 1 minute before the market opened. All right. We mark out the highs and the low. So at 8:45 p.m., that was the lowest price that Asia gave us. This is the low of Asia. And this is the high of Asia right here. And as you can see, we disrespected it pretty quickly. Price just went above it. Didn't matter at all. Now, let's look at what happens during London session. This is very interesting. London session opens up, and at 3:30 in the morning, it goes below Asia. Let me turn off the boxes so you can see. This is the low that we put in at 8:45 at night. Then at 3:30 in the morning, we barely went under it. If you draw a fair value gap out, it fully closes the fair value gap, touches the bottom of it. And while it does that, it sweeps the liquidity from Asia. Now, watch what happens afterwards. We take the liquidity and we run to the highest it's ever been, to all-time highs. So this is a super key level right under here. That is an extremely key level for us. That also is the low of London session. Look at that. Isn't it just lovely? It's like art. Except the market manipulators are the painters. All right. And then this is London high. It's not that important, to be very honest with you, because after we put the high in, we just continue higher. So what do I want to see happen now that I saw this? I want to see price be aggressive. So in order for price to be super aggressive, liquidity, remember, you have to put in a low, and before you go higher, you need to go under the low to take liquidity and then go higher. You need to see this. You need to see a low and then price go lower before it goes higher. Correct? Now remember that. That's important. So what low? Where is the lowest point in this move? The whole move up, where's the low? I hope that you said it is right here. Because we have this low, go high, low, high, lower, and then high. So within this final move up, what do you want to see happen? You want to see price come down and then make a lower low and then continue higher. Correct? Now, what did I just say? For it to go higher, you have to go lower. So we're going to try to catch that move lower. It sounds counterintuitive, but we're going to try to catch the move lower. Or that is the top, and we're going to see price go higher and then lower. In either of these scenarios, we don't know if it'll go higher, but if we want it to go higher, it has to go lower first. And because we're already at all-time highs, if price goes higher, we will most likely reverse and go lower. So what's more likely? In both of these scenarios, we still have to go lower. Now, if we continue lower for the rest of the day, I don't care. We're just trying to catch that initial move lower, right? So in both possibilities, if we go down or up for the whole day, in both possibilities, we still have to go down before we go up, or down and then continue down, right? But in the possibility that we go down, right, we go down, or we go up and then down. I hope you're picking up what I'm putting down here. No matter what happens, we still have to go down before we go up, or we go down and then continue down. But no matter what, we have to go down. We have to go down to collect liquidity. That is a must. So I am going for shorts. That's how I decided that. So now, if price were to go up again, where can you expect it to stop going lower? Well, how does buying a pair of shoes at half off sound? A shoe is $100. It goes down to $50. Cool. Half off, right? That's pretty cool, right? So it's called consequent encroachment. Get the halfway mark of this final move up, right? The whole move up, the halfway mark is right here. This is your 50% off discount, okay? That green line is your 50% discount. So if price were to go higher, I still want to see it go down here before it goes higher. So this is a beautiful short that you can take down to here. Now let's go down to the 1 minute time frame. The same chart, but it looks a lot bigger, more complicated. That's because we're on the lower time frame. There's more candles, more details. Okay. So this is 1 minute before market open. So what do you see? This is called liquidity. When orders go up and down like this, that's called accumulation. They're accumulating liquidity. A lot of people are buying and selling here because they don't know if it'll go up or down. This is classic manipulation. This is people literally manipulating the market. Okay? When you see this, expect a breakout. Expect price to make a big move. This is manipulation. A lot of people lose money here. They're trying to force a trade. A lot of people lose money trading. Do not, if you see this, don't trade it. Just step away. That's manipulation. That's the worst time to trade ever in the whole world. But what does this tell us? Watch this. You see this low right here? That move down before we go up? Let's draw a line from it. Watch. Oh, wow. What is that? Is that another low? Oh, wow. Wait, hold on. Why is it like almost at the same level? What do you think people are going to do here when it goes back down here? They're probably going to buy because this is a good support zone, right? This is really strong. That's a good area to buy it right here. No, my guy, that is a good area to lose money. That is where I'm making money, my boy. That is where y'all are getting manipulated. This is where price wants to go. I remember I told you I want to see price go lower before it goes higher. When you see stuff like this, you call it equal lows or equal highs. You get this low at 8 in the morning before the final move up. Then price accumulates, and it's messing up a lot of people's head right here. But right underneath it is that low. So this low and this low are at the same price. A lot of people will be buying here. This is where a lot of people will lose money because they're going to buy it at a bad price. And when you buy it, someone's selling it. When you sell the market, someone has to buy it. So the people who are selling it up here, like me, As soon as it hits here, we're going to buy it back and I'm going to make a profit. And if you buy it here, it's a really bad idea because price is going to continue lower. So that is liquidity. That is a lot of liquidity. Now, what else do you see? You see this? All of these equal highs. Look at that. Look how flat and perfect it looks. Let me make it huge so you guys can see. Look how perfect that looks. Oh my gosh. It almost draws a perfect line, right? It's almost like a roof. That is equal highs. It's the opposite of equal lows. So what happens? Price accumulates orders in here. We manipulate. We make a fake move up. Fake move up. And then you dump. Literally dump. So 1 minute into market open, and the first thing that you see is this. That's atrocious. That's scary, man. That's a lot of people losing money right there. But that's not what happened to me. So boom, you see another closed candle down. What did I tell you? I want to sell the market. I'm selling it today. I'm selling it. Boom. Look how big these candles are. You think this stuff is made up? You think that there's not people here manipulating the markets? Like, bro, this stuff is rigged. Now, boom. How am I going to catch the move down to this level, like I told you guys? If we were to go higher, this is that level that I'm trying to get it down to. Correct? Correct. How can I expect price to come down here? Okay. That's a good question. How can I expect that? Let me show you. Just because this is the price that I want it to go down to, sometimes it doesn't make it all the way down halfway. But what do we have here? We have a low. So maybe it'll make it down to here. Okay? Follow what I'm putting down? Good. What do we have here? This is a fair value gap. This is an imbalance in price. This area right here is an imbalance. There's a lot of people trying to sell the market here. And people who are trying to buy it got a really bad fill. They did not get their orders taken. So when price does come back up here, we already manipulated higher. So now we need to manipulate lower, distribute the price lower. So what you do is you enter your position here. We're not buying the market, we're selling the market. So boom, your stop loss above that candle and your take profit. Where did I have my take profit? Oh, it must have been right here. Okay, boom, take profit there. I guess I think, oh, you know what? I did trade this. Yeah, I did trade this. Okay. So now look at this again. Remember that 50% level? This is a good area to aim for, but what's an even better area to aim for is this. Look at this. Remember that 50% level? This level right here, the one that I'm moving around, that is an extremely important level. But look for areas close to it. What do you see here? You see a low right here. Another low right here. Another low right here. And another low right here. What do you think is under all these lows? If you said liquidity, you're on your way to become a pro gambler. Welcome to the club. So, let's draw the line out here. That is what I'm targeting. All right. Now, we'll give it some wiggle room because I usually don't take it to these exact levels. I usually give it a little bit of wiggle room to miss my entry. But watch how fast that this manipulates. 1 minute, we're in the trade. Hold on, 2 minutes. Okay. 3 minutes. 4 minutes. 5 minutes. 6, 7, 8, 9, 10. I was in this trade for 10 minutes. And look at the precision of these levels. As soon as it hits this level, it goes right back up. This stuff on the market is so precise. It happens to such a perfect and precise level. It's calculated, it's manipulated. The people behind this are masterminds. They know what they're doing this stuff. It's so precise and so calculated and so perfect, for a lack of better terms. This stuff is so precise. There's levels, there's actual levels to this stuff, all right? So that is how I caught a simple trade. It looks very, very easy from the outside looking in, but you have to understand why we want price to go lower, how we want it to get there. What do you want to see before it gets there? What do you want to see after it gets there? What are you have to build a story in your head about what you think will happen and why will it happen. And it can't just be, oh, I want to see it go lower because we've been going lower. That's not how it works. It doesn't care what you think. It doesn't care what you want. My guy, there's levels to this. And then watch. I told you, before we go higher, we have to go lower. Look what happens. Right at these levels that I drew out, we start going higher for the rest of the day. But I told you, I don't care what happens for the rest of the day. I'm not trying to catch that move up. I'm just trying to catch the initial move down. And look at that. We continue higher for the rest of the day. Price continued to go up for the rest of the day. And I told you, before we go higher, we have to go lower. And if we go lower, then we'll continue going lower. But no matter what happens, we have to go lower. And boom, we went higher. But before we went all this height, we had to go lower first. And we cut the move low. And in 10 minutes, I was done for the whole day. I was done working after 10 minutes for the whole day. All right? So hopefully this stuff clicked for you guys. And if you want to be pro gamblers like me, make sure you continue to watch these videos because they will be very informative. And if you guys want a trade recap for today, I also traded today. The trade that I took today was right here. Stop loss here. Oh, stop loss here. Take profit right here. And unfortunately, I closed my position at break even, so I made $30 instead of what I was supposed to make because I didn't like the way that market was moving up and down and up and down. I don't like to sit around and feel nervous and stuff, so I closed it early. And yeah, I caught the top of the move for the entire day. That would have been an insane trade if I was in this. Look at that. I could have caught that whole thing. But that's beautiful. But there are so many ways to learn this trading stuff. It does not have to be complicated at all. You just have to understand how the markets move and why they do what they do. All right. Well, if you guys want to be a pro gambler, subscribe to the YouTube. And yeah, I'll see you guys later. All right, gamers. Good game. Well played. Gamblers, go all red. Go full port blacks on blackjack. Go all your life savings on blackjack. All right, guys.